On the credit pie, we got 5 factors that determine your credit score. We got credit mix, payment history, length of credit, inquiries, and the most important to me, utilization. Let's talk about it. Welcome to Levelup Finance, where we talk about money, mindset on the road to get millions. On this episode, we're going to talk about why utilization is the most important factor to me for your credit score. Like I said, there's 5 factors that determine your credit score, and utilization is one of them, and it accounts for about 30% of your credit score. All right. So with utilization, it's not the biggest. Payment history is the biggest when it comes to determine your credit score. But to me, utilization have the biggest impact because you literally can have great credit one day and have bad credit the next day when it comes to utilization. Try maxing out all your cards 80%, 90%. You're going to get denied for everything. If you used to get, offers in the mail, email, people always used to extend credit to you and all that as far as banks, you're no longer that type of person anymore. It's in their eyes. They're going to deny you for everything. You're a black sheep. You're blackballed now. You're ugly duckling. Nobody wants you. It's pretty easy to fix high utilization. The only thing you got to do is pay off your bill or pay it really low. Pay it to 10% or less if you can. There's no need to have 80%, 90% utilization. It's going to hurt you. It's not helping you. I don't care if you got a budget. If you got a budget, you know how much you get paid after all your bills is how much you got left. So you could coincide with your spending, with your credit card, because you don't want to spend $1,000 a month if after you pay all your bills, you only left with $500. That don't make any sense. You will always be hustling backwards. So, even if you put all the leftover money you got on your credit card, you're still going to have an extra $500 on your credit card bill every month. And in a year, that's over $6,000. You don't want that. You either got to increase your income so you could be able to spend a little bit more, because you don't want to be one of those, impulse buyers. I was an impulse buyer at one point. Like if I see a TV, I can't afford it, and I got, a $3,000, $5,000 credit card, and the TV's $1,000, swipe. But then you get in trouble, you know what I'm saying? If you keep doing that a lot, you just don't do it on TV. You buy some Jordans, you buy an iPhone, you buy some stuff you don't really need that you really can't afford. The only reason that you could afford it because you got a credit card. You're always going to have high utilization because you're never going to be able to pay it off, So that's probably the main reason a lot of people, is in that type of issue. Like I had high utilization, very high utilization, because I used to buy things I can't afford. If you can't afford it, that means you can't pay off the bill when it's due. And if you can't pay off the bill, you're just paying the minimum. And if you're just paying the minimum, you're going to drag this thing out for God know how long. I see one of the biggest things out there, advice in finances when it comes to credit card, is have 30% utilization. Like 30% is this magic number out there. Like if I was applying for a credit card or a loan or anything, they're going to look at my credit report and be like, well, you're not at 30%. I only see you at 20%. You're denied. No, that's not how it goes. 30% rule or whatever, or myth out there is a stupid one. The 30% rule is basically saying stay in debt. Stay in debt 30%. So if you got a $10,000 credit card and you have 30% on that, that's $3,000 in debt, right? So if you, like me, and you're in the credit union, the highest interest rate you could get on a credit card is 18%. So if you got $10,000 credit card, you got 30%, that's $3,000, and 18% of $3,000 yearly, because you pay that interest annually, is $540. All right. So you paying $540 interest every year for no reason. And especially when you can pay it off. Don't be cheap. Pay it off. Shout out to Barry. I seen this guy in real life. He showed me his credit report. He was in high 90s, no derogatories, no lates, no nothing. The only thing that was stopping him was utilization. So don't be cheap. Pay that thing off, So don't keep it at 30%. Just pay it off. Pay it off. 30% you could pay all this interest for no reason. And if you had like a Chase card, and you could be at 26% utilization. All right. 26% interest on that $3,000. And let's do the math on that. $3,000 times 0.26, which is 26%. Boom, $780 a year interest. That's say if you had like a Chase card or one of these big bank cards, whatever. So but say you had that credit card for 10 years and you kept it at 30%. You pay $7,800 in interest. I started my credit journey last year on rebuilding everything around August, September. That's when I first got my first real credit card from Navy Federal. And it's been a year later. And the main thing I did was keep my utilization low. Now I got over $60,000 in personal credit and a little bit over $40,000 when it comes to business credit. And I think that has a lot to do with low utilization because I'm fundable. I don't look desperate for credit. I don't look like I'm living off of credit. So I'm very lendable, fundable, whatever you want to call it. Like, hey, this guy pays his bills, and look, he got these credit cards and he keep his utilization low. He's not thirsty. You want some more money? That's how they think. Like when you don't look desperate or hungry for money, they want to give you money. Just do the utilization thing. Don't worry about, paying things off because that's recycling money. Just have low utilization. Trust me, you're going to get more credit cards and bigger limits in a year, 100%. That's something I could promise you. If you pay your utilization down, if you're at 90%, you pay that thing down, first and foremost, your credit score going to jump up like 100 points. No lie, lazy eye. And within a few months, you're going to get all these emails and letters in the mail talking about, hey, you want this credit card? Hey, you want this loan? Because you look good now. You look pretty. You look very attractive to the banks, all right? So anyways, if you like this video, give me one of these. Subscribe if you're not already subscribed. Hey, and I'll catch you on the next one, all right? Level up. Higher.